Well, hi, Andrew Bell here with you again. As you probably have observed, I'm really focused on the core issues of the housing crisis at present that we're all experiencing. There's not a person in Australia who doesn't relate to housing. We all need a roof over our heads. And as so frequently reported, we currently have the worst housing crisis in the country's history. I previously touched on the stark contrast between supply and demand. That is the core of the problem. And nowhere does it show up greater than in the rental market. I have lots of interesting and very self-explanatory stats to share with you. First up, we should remember that this acceleration in the cost of rentals has come off a prolonged period of low rental growth. In the last 4 years, prior to the pandemic, rents nationally increased by an average of only $25 per week over the 4 years. And in some markets, it actually climbed by $30 per week. So if you're actually looking at rental stress that we see now and the huge acceleration of rents over the past 4 years, we should also take it in perspective of the last 15 years, where it would not look as dramatic as it is. But the reality is that it has been a shock to the system for renters. Now, the rental crisis worsens daily, and there are two aspects to this. First, the actual cost of the rent. On your screen now is a graph showing the median asking rent dating back to 2014. And of course, you can see the massive escalation in rental prices in recent times. The graph speaks for itself, as you can see, just how dramatic the increase has been. Now, the second factor of the rental crisis is the availability of rental properties. I'll give you an example which is relevant because we are the largest property management company here on the Gold Coast. We had a property come available for lease and started advertising it on a Thursday, late afternoon. By Monday morning, we'd received over 500 inquiries. And after receiving 37 applications, we closed off applications as we didn't want to cause any more frustration or stress for those people who are going to miss out. 37 applications on one property in 4 days. And if we left the door open, there would have been 100 plus. So the graph on screen now shows the rental vacancy rate. 3% vacancy has always been the benchmark of a balanced rental market. Vacancies above 3% means that rental rates would decline because there would be oversupply. And sub 3% means there's a shortage. Now, throughout my time in the industry, we generally saw vacancy rates range from 2.5% to 3.5%. But as you can see from the graph, all major capitals, apart from Melbourne, have a vacancy rate of 1.5% or less. Here on the Gold Coast, we're around 0.7%. So it's no surprise, with that sort of demand being as high as it is, that we're looking to increase supply. That's what we need. The graph now on your screen shows that building approvals, which are not just for rental properties, but housing in general, have plummeted to near non-existent levels. Remembering the graph is showing us from 1985, and we see all the way through to the 1980s and 90s, where we were actually building more properties back then when we had a much smaller population base than in comparison today, when we're almost building nothing and our population base is significantly higher. We have a real problem. So it's no surprise that the latest figures show rental prices have increased 7.8% in the last year. That's the strongest rise in rents since March 2009 quarter. Now, there's some forward indications that rental growth is deaccelerating, not significantly, nor is it likely to be sustainable if we don't increase the supply of rental properties, because we have this strong population growth, which always shows up first in the rental market. People will rent while they're trying to save money for a home, and our migrants coming in here will always rent first. You know, it's quite interesting to see that in many suburbs around the country, it's now cheaper to buy a property, own it and pay the mortgage than it is to rent it. Who would have thought that happening here in our country? The other piece of news is that there has been a slight tick up in new housing loans to investors, which rose 1.2% in February 24 and was 21.5% higher compared to a year ago. But remember, that was coming off an almost zero base a year ago. What we really need is for more Australians to invest in rental properties, and certainly for existing landlords to hold on to their investment properties and not sell them. So a very simple answer to solve this problem, which is more construction, yet with some real hurdles that some might find insurmountable to jump. The solution, as I said, is simply to build more rental accommodation, and primarily in affordable rental space, which I would say is in the 600 to 850 price range. Call that affordable. That will give us bulk building rather than relying on simple individual investors, but one investment at a time. If we can build blocks of apartments of 300 to 500 rental properties, then we will get this acceleration. It happens all around the world. We're one of the few countries that don't use it. And of course, what I'm referring to here is build to rent. It's a really important segment of the market, and it's done in style and class, and it is not what we might have thought was the old public housing. This is designed for the affordable market. Now, what governments have to remember is that we shouldn't be vilifying investors. We should be encouraging them, and we should be thankful that there are people who are prepared to step up and buy an investment property. Discussions along the lines of rent freezes or changes to capital gains or negative gearing are simply disincentives. In fact, what is needed now is more incentives, not less, to encourage people to invest. Remember, nearly 90% of all rental properties in Australia are owned by teachers and nurses and public servants who own just one investment property as they try to build a nest egg for their retirement in later life. They're not greedy landlords who are profiting off tenants. They're people who are trying to become self-sufficient and not be reliant on pensions and handouts later in life. That should be encouraged. Well, that's it. That's enough for this week. I look forward to being with you again in a fortnight's time as we look in more detail into the build for rent market segment, which is quite fascinating. Regards for now.